Jonathan, I guess the last few weeks we might have been worrying about some kind of big correction in a whole range of commodities. We see that story of today, China increasing steel production. How is that likely to affect pricing, and can we rest a little bit easier reading stories like that? Does it remove those fears of a decline for prices, say, of iron ore?
Look, I think, Brooke, it's that whole space, the whole commodity space has been, I guess, mixed, and we've actually gone through a level of consolidation for it. I guess the key for me is whether or not China's going to get into its growth phase again. The numbers suggested with the steel output, I think, would have to be correct. It's not whether or not they're going to continue to expand. It's actually keeping the status quo. It's actually keeping what they're doing in terms of creating that infrastructure, which will keep demand up. So it's not really a demand story about growth. It's more about just keeping infrastructure up so that China can get that infrastructure. Remember, they embarked on such an ambitious campaign to make sure all corners of the country were connected by a very, very good network of transport. So I think this demand is just a feature of that, and really I don't think prices should continue to trade higher. They should just continue to consolidate.
But what about the ban on iron ore exports by India, though? That affects the supply situation?
Yeah, I think that once again, if you do get that ban in India, look, that's only going to create initial tightness, but they're going to get a lot of iron ore from somewhere else, and as long as the weather holds well in Australia, they're going to get a lot more supply from us. Iron ore can easily be moved around the globe. It's a question of just where you get it from, and also naturally the price. But whilst you've got these demands, certainly out there in certain economies, the supply will always meet it. The question is, at what time or what price does demand slow down? And with China continuing its slowing down process, it will have an effect. But I think at the end of the day, it'll have a positive effect on the price by keeping the price stable.
Can I ask you about gold, Jonathan? I think it gained just a touch overnight. I mean, volumes weren't even there because of the public holidays. But, I mean, considering the debt problems in the Eurozone, is there any reason to expect that money doesn't go into gold as we continue to talk about this issue?
Well, look, I think it's once again, it's that portfolio. Approach to the markets at the moment, because equity markets seem to be moving sideways, commodity markets are sideways, and I think if people jump on or get a good story, they're going to follow it for some time. And I think with the debt crisis in Europe, that to me remains a definite concern, and obviously we get this flight to precious metal. We've also got those inflationary concerns, and more importantly, the investment demand has really picked up. I think one of the interesting things over the last week that I've noticed is that China has now outstripped India as the country that has the most demand, and to me that's certainly a sign of things to come, but it's going to say to me the precious metal will certainly remain supported on any dip.
What else is happening in that Shanghai market? Because I was just reading, I was kind of astounded, I was just reading trading volumes for Shanghai silver in May, more than 3,000 times the volume just at the start of the year, just at the start of 2011. This enthusiasm towards investments in silver, but you've also mentioned gold. What's happening in that market that's driving that?
Well, I guess you got to look at what's happening in China in terms of those investment philosophies coming through. The government's put so much restraints on certain amounts of investments, real estate and the like, that people are looking for other avenues. And because they're seeing this, the volatility in the silver market together with a very good story behind it, they've naturally said, hey, we're going to have a look at this and we're going to start to trade it. So those volumes are certainly there. It's also the case that the Shanghai Gold Exchange has made access quite readily to a lot of the investors, and they're also looking to issue more products. So it's actually becoming more of a staple for people to trade the precious metals because it has this global approach, and when you buy it, you've got that ability to be able to say, oh, it's a speculative, it's a hedge against inflation, and it's an investment. So it really fits a lot of those little key investment baskets.
And so does that explain why you've seen the hike in margins by the Shanghai Gold Exchange, and are we likely to see then more of them?
Well, I think this is the interesting thing because, I think the margins are there to reflect the market. Now, in silver at the moment, there's a very big story about, is there manipulation in the market and what's actually happened there? And really we've got to look to see what the regulators actually see, because when we saw that big move in silver, it is a case of, look, hey, there is a bit of a concern here. Margins have gone up, and has that squeezed the investor? In my mind, putting the margin up is purely about protecting the investor more than anything else, and trying to make sure that the correct people are involved in the market. And I think the move by the Shanghai Exchange is right, so we can get the mums and dads that don't understand how these products work out of the market and get those people that really understand in the market. And I think to me it's just a very prudential thing to do to help safeguard the integrity of the market.
Another big issue out of China is these power shortages. They're looking at the worst power shortages since 2004. So that obviously puts pressure on a whole range of industries. How are you seeing that kind of show up in any price action you're watching across commodities? Or is there any kind of positioning that you're taking or suggest other people should take?
Well, I think it is obviously a major issue in terms of the power supply because you don't get it to industry. It's very hard to try and invest directly in the power shortages. I guess you can look at it two ways. Power shortages means that people can't produce. Maybe that's working hand in hand with the government over there when they're trying to slow down the economy. It's one of those things you've got to look at. But I guess when you're looking at it, it's very hard to invest in that type of thing, particularly when the economies continue to grow and the people want to expand, but they just can't. If anything, it'll have the effect, I think, of driving prices higher, which is something which you really don't want to see at the moment.
Sure, and economic data is definitely the focus across the globe this week, as we mentioned with Juliana as well. But what events do you expect will actually affect risk sentiment in commodities specifically?
Well, I think obviously the Memorial Drive holiday. That is the ticket to the drive season, and I'm going to be really looking to see whether or not that might have more of an effect on crude oil, see crude oil prices higher. Crude oil stayed at 95 a couple of times, so we're expecting it probably to gravitate a little bit higher on expectations that people will consume more gasoline. Towards the close of the week, we've got the very important unemployment data in the States. Now, the market will drive in that, expecting, I think, to see a good number. So that should underpin some of the moves in commodities this week, and I'll probably see the whole complex start to edge a little bit higher as people really try and capture this optimism in the US about economic recovery, and as a result of that, the demand for commodities. So I'd like to see commodities just all ratchet a little bit higher throughout the week.
Fantastic, Jonathan. Thank you so much. It's bright and early for you, so thank you very much. Thank you.